you see the support and you want to reach that support. In that case, you see that the price is moved in your vicious direction and you make a sell order. When you make a sell order, you see that the little bit wave against your trend. You think, okay, this is nothing. And you in one moment make another sell. But some bullish trend that happens, and in that moment you see, oh, I think the price will reach the support. And you make another sell trade. Yes, the price is going to my support, but very soon you see that the price is going up and you make another and another sell order, and very often this can be several losing trades in a row. Hello traders, this is Igor from FX Igor YouTube channel, and today I will talk about stacking strategy. Very good strategy that can increase your profitability if you apply very good in your systems. What you need to know that very often your portfolio or your trading account will be in drawdown, and in the periods of the maximum drawdown you think about period of recovery. You want to recover and sometimes you will succeed. However, there is a huge problem. In some cases, if you make several losing orders, you can blow up your account, you can burn your account, and it's not good. So in this video, I will show one strategy that is excellent comparing to mean reversion strategy that some traders apply. What is stacking? It's a trading strategy. If the first trade is profitable, you add new trade, put the same stop loss, the same target, and test to happen. So I will just try to explain you. Right now on the screen you see the resistance and you see some bullish movement. So you made a plan. You see bullish movement and you enter on some support, for example a buy. This is the first trade. The catch is, if in some moment your trade is profitable, in that moment when you reach that distance, you make another buy trade, but only if the first trade is profitable. You don't close the first trade. You keep the first trade, but you add a second trade in the moment when the first trade is profitable. Then, if the first and the second trade are profitable, you will add a next trade, the next buy stacking trade. And on the end, you can reach the resistance. So, what is very important here? The very important plan here is to calculate the distance. For example, in this example, right now on the screen, I choose to put two additional trades. One trade after 33% of distance and another trade after 66% of the main distance. So I will have the three trades in one moment and all three trades should catch the resistance. Of course, sometimes trend can switch and you can lose 1, 2 or 3 trades, but probability is on your side, because usually when we trade this kind of strategies we can see that the price usually reach the target. The target is some strong resistance or strong support, and the good thing is profitability can be increased. Of course, if you manually trade, you will always try to buy on the pullback, like on these two circle areas that just show right now. However, we don't know where will be the pullback. You can use the Fibonacci retracement, you can try to estimate, you can add, but the most important thing in the system trading is to calculate the distance. And that distance can be 25%, can be 20%, can be anything, and you can put in row several trades, and only if the first two are profitable you will add next. If the first, second and third trade is profitable, you will add a fourth trade, etc, etc. So it's very important that this kind of strategy just add more and more when you are in profit, and if you lose you will not add any trade. Right now I want to show you the difference between the expert advisor that use one trade and an expert advisor that use multiple trades based on the stacking method. Right now, we are watching an expert advisor that is testing the whole last year and the first 3 months of this current year, and we want to see what will be the performance. Right now, we are watching a system that trade only one trade per time. So only one trade per time. And as you can see, we have a profitable trade, we have a losing trades. We do not increase the position. We do not use any martingale or any stupid strategy on this. We only trade one trade with fixed number of lots, in this case 1 minute lot, and we're watching the performance. Right now we have a 34, 36 trades, and we are just watching what will happen. The most important thing right now when we're talking about this approach is if you try to optimize and work on the system with only one trade. Later, you can improve the system a lot if you add a multiple trades, if you use a stacking method, etc., etc. But the most important thing, especially in expert advisor developing, is to create a strategy with only one single trade per the time. And in that case, that kind of strategy, you need to analyze to see what's happened during the large time span. Sometimes I'm testing 20 years and more, and then to compare with other systems, and of course to try the multiple trade systems, etc., etc. But the first thing, it's very important to optimize and create one trade per time. We're still watching the trade, and this is the profitable trade, but of course there are several losing trades in a row, then several profitable trades in a row. So of course it's very hard to develop the perfect system, but this system is promising. Right now we can see that we already have 270 pips of this system, and it's going up. We can see that the system has the better performance in the second part of the last year than in the first part of the last year. After analysis, I will figure out that the first part of the year was volatile, and I see already now that the system is impacted on the volatility. So in the future, I need to put some filters that will not open the trade during the high volatility or high spreads, or during the most important economic news. As we can see right now, we have already 100 trades. The second part of the year is drastically better than the first part of the year. But this is not important. This is the single trade. Right now, the system is tested. So we'll go to the report, and we can see there is almost 500 pips profit here, with the maximum drawdown 224 pips. And as we can see right now, we have 7 consecutive profit trades and only 3 consecutive loss trades. So this is the very good. And I can see that the profit factor is 1.47. It's not something beautiful, but it's okay, it's a decent. So right now I will test the stacking strategy to see what will happen, and in this strategy I will put up to 3 additional trades. Now we're starting to test the stacking strategy. As you can see, very fast we have more trades, and you can see from the beginning of the year we have excellent performance, and we already reached the number of profitable trades. Just, I think it's in the March, yes, just in 2 months we had a better performance than the whole past year if we tested the single trade. Look this, how that performance is very, very good. So the stacking strategy represents very, very good performance. Of course, this strategy is very good optimized for the last 2-3 years. If I test in 10-15 years, the strategy will be the profitable, but it will not be such a good success, it's such a good profit factor. However, I'm just watching to see what will happen to the end. Of course, you need to test the stacking system using the different distances. You can, for example, add any new trade after 10%, after 20%, after 30%. You can play with this. You need to make a lot of experiments to see for every single strategy what is the best optimized number of additional trade. You need to know that when you do this, the drawdown can be increased, should be increased, and it will be increased. Of course, the good thing is that if you increase the drawdown from 25%, you can increase 50-60% the profitability. And this is the most important thing, and this is the reason why we are doing this, because the ratio between the total net profit and the maximum drawdown will be bigger if we use multiple stacking trades. However, you can see right now a little bit pullback of this system. The system is not perfect. As you can see, in the second part of the year, in the summer, we had a little drawdown. It's not just a little. It's about the drawdown from the July 1st to the July 20th. So July month was very bad in this multiple trades stacking strategy, and I need to figure out why is that, what's happened in July. And of course it's a process of experiments and everything. Of course, when I test the systems, I'm testing 20 years in the past, and then I find several examples when my system was not good, and then I think, why is that? Why do I need to change? What filters I need to add? Where is the problem? What's happened here? Sometimes I watch weekly charts, daily charts to figure out on 1 hour chart strategy what is the problem. And usually it's correlated with news, with volatility, and I know if I put the filters that will protect me from all this high volatility news, etc., I know that my system should be better. Of course, you need to make a lot of experiments. You need to work a lot, measure the drawdowns, and for me, the most important thing is to have the good ratio between the total net profit and drawdown. Why? Because Sharpe ratio, profit factor, everything is good. But for me, if I want to create a good system, it's very important that my profitability is much bigger than drawdown, because on the end the drawdown is the most important factor if you use a prop trading companies, because you need to keep your drawdown less than 5%, so you need to be careful when you talk about drawdowns. I know that is a stacking, I know that you add new trades if you have a profitable trade, but sometimes can happen that the last trade didn't touch the target, and then all trades that you open start to go down, and it's not comfortable. So we need to see what will be with the drawdown, what will be with the profit factor. So I just watching. I see another drawdown here. It's a small drawdown, but it's the drawdown in the January month, and I expect this. Why? Because in the first 2 weeks of every single year in January, we can see the huge volatility, crazy volatility, and sometimes it's bigger, sometimes it's smaller, but January month is very important. And usually, if you have a systems that do not chase a large profit, you can see the problem here and sometimes larger drawdowns. But nevertheless, I just want to see how this multiple stacking strategy performs. Right now the strategy is finished and I will go to the report. As you can see, my profit factor is 1.95, and as you can see, the total net profit is almost $2,800. and maximum drawdown is $970. So if you remember the previous trade, we have right now something like we doubled our drawdown, but our profit is several times bigger. So on the end, when we calculate and see, multiple stacking strategy is much better than single trade. Of course, we had a total almost 400 trades, and of course, each trade is some kind of cost. In MetaTrader 4, you cannot calculate the cost very easily. However, you know that for every single lot that you create, and you pay, if you have a zero spread account, you will pay, for example, $6 or $7 per lot. And in this case, will have a 40 lots. So this system will pay additionally around like I said, $280. So on this amount of $2,700, I need to remove the commission for trades. However, the strategy will be profitable. The profit factor will be a little bit less, but the strategy is much profitable than previous. And like I said, when you create excellent expert advisor, one trade, after that it's much easier. After that you can using multiple stacking strategy, you can improve profitability, you can improve your strategy a lot. But the first step is very tough, how to create a profitable strategy. So I hope that you enjoy when we talk about the stacking strategy. I wish you a great day and bye-bye.